The likes of Warren Buffett say that Bitcoin is rat poison. The likes of Jamie Dimon say that Bitcoin is a terrible store of value and that Bitcoin is fool's gold. Bitcoin is worthless. People who are not super much involved in Web3 forecast that Bitcoin is dropping down to zero. The general consensus of crypto haters is that Bitcoin simply has no fundamental value. In one of the next videos, I will demonstrate how crypto has a lot of real, fundamental, and intrinsic value. But for the sake of the argument in today's video, let's assume that crypto has none. If you want to bridge from Web3 utopia to Web3 reality and reclaim your rights of privacy, financial autonomy, and ownership, join the Ghost ecosystem by visiting chain.ghostchain.io. You can find all the necessary links in the video description below. Does it still mean that crypto is going to zero? My argument is that even without any fundamental value, the value of crypto is unlikely to drop down to zero, because every single asset in the world is priced based on supply and demand. One of the most popular examples of supply and demand is water. In many developed countries, drinking water is free or dirt cheap, but ask the same question in the desert and now the same drinking water suddenly becomes a lot more valuable. Pricing assets based on supply and demand instead of their fundamental value holds true in the stock market as well. Let's compare two major competitors from the telecom sector, AT&T and Verizon, and let's compare them based on the PE ratio, which is effectively the ratio of company's supply and demand value to its fundamental value. Can somebody please explain why AT&T has a P ratio of 9.3 while Verizon stock trades at P ratio of 15.2? And the Wall Street analysts will tell us that Verizon has better management, better prospects, and the revenue is growing at a faster rate. And that's why Verizon is objectively priced higher than AT&T. However, such reasons in most cases are super subjective because every single Wall Street analyst has a different opinion on the same exact stock. And if the fundamental value matters more for pricing a single company than the supply and demand, can somebody please explain to me why P ratio of banks with virtually identical business models have such vast yet little difference in their P ratio? Does it mean that Citigroup, trading at 18.7 PE, is so much more efficient than Wells Fargo, but Wells Fargo is just somewhat more efficient than JP Morgan? Clearly, fundamental value is just a factor and may have little to do with the price of a given stock. But what if gold trades at its fundamental value and its price is not impacted by the supply and demand? Gold is a hedge against inflation. If the price of gold was trading strictly based on its fundamentals and thus perfectly tracked inflation, then gold would not be having periods of underperformance or overperformance. If all assets trade based on supply and demand, the same must be true for Bitcoin. And lots of people talk about the fact that Bitcoin has a limited supply of 21 million coins, but very few attempt to estimate the magnitude of global demand for Bitcoin. Here is a quick use case. Take a citizen from a country which is going through hyperinflation. The world has a lot of countries like this: Venezuela, Iran, Sudan, Turkey. What can that person do to protect his purchasing power against inflation? The most obvious answer is to buy physical gold. But here's a problem. In most countries, including developed nations, the bid-ask spread on purchase and sale of physical gold is around 5 to 10%. On top of it, despite the fact that gold doesn't tarnish, you still have a problem of selling your physical gold. If you bought your gold from vendor A, there is a big chance that vendor B will not accept your gold, which creates a huge problem for an average person. The second option is to invest your savings into the stock market, and that's typically the argument of people who never lived outside of the United States. The problem with that is that in emerging countries there is lack of capital markets. Most emerging countries have between 10 to 20 major stocks to invest in. Some countries introduce preventative measures against investing into American, European, and Japanese stock markets. Thus, equity markets are often not an option. Since gold and stocks are a no, the final option is to put your savings into real estate. That's what many people do, but here's a problem with that. Say Turkey. Turkey is under severe inflation since COVID, but Istanbul real estate is not doing so great despite massive capital inflows. For example, the price per square meter of an apartment outside of the city center was around $2,000 in 2010. In 2023, the price per square meter in dollar terms is lower, despite the fact that US dollar inflated away a significant chunk of its purchasing power since 2010. We can observe similar trends in the Argentinian real estate market. The prices of real estate in Buenos Aires, in the city center and outside of the city center, stayed the same over the course of 13 years with almost zero price appreciation. If I cannot invest in gold, the stock market, or real estate, crypto becomes my only option, my safe haven. And here is a super high level estimate of crypto demand from high inflation countries. If residents of these countries invest 20% of their savings into crypto, we look at 118 billion of net investments into crypto every year. We can continue this exercise with the most developed G7 countries. If citizens invest 1% of their savings into crypto to diversify their portfolios, we are looking at the additional $93 billion of investments into crypto markets every year. Here you have it, the limited supply of 21 million coins and 200 billion worth of demand on the annual basis. Even if Bitcoin has no fundamental value, the supply and demand forces will still be driving the prices year after year just because there are not that many alternatives to crypto.